2024 was nothing short of incredible for Palantir. Our momentum accelerated through year-end, closing out 2024 with exceptional Q4 results, including an extraordinary top-line beat and outperformance led by our U.S. business. Revenue grew 14% sequentially and 36% year-over-year in Q4, and 29% year-over-year for the full year.
Palantir's explosive growth in Q4 will make you rethink everything. Check this video out to find out how.
The AI revolution continues, transforming industries and redefining how organizations operate. AI is a pivotal component in driving innovation and efficiency, something companies need to embrace or fall behind. With the proliferation of AI models, the raw AI labor supply is exploding. While everyone else is focused on the model supply side, we're transforming AI into a measurable stream of high-value finished goods and services. The result? The rapid emergence of quantified exceptionalism for organizations able to unlock the potential of these commoditized models through AIP. A byproduct of our incredible progress, our Rule of 40 score increased to 81 in the fourth quarter. It's a substantial leap to deploy LLMs into production with real impact. Most organizations are currently stuck on the wrong side of the widening chasm, working on their 2, 5, and 10-year plans, which become obsolete days later, failing to ever take action. But not Palantir or our quickly growing customer base. We've taken our position through our decades-long investment in developing the ontology, which allows organizations to seamlessly weave LLMs into their enterprise, unlocking their highest potential leverage. In this AI revolution, anyone looking for a solution that actually works is going to choose Palantir. Last quarter alone,
it's clear that AI isn't a distant future, but something that's actively transforming industries today. Palantir's ability to turn AI into high-value, measurable outcomes puts it in a unique position to dominate, especially as companies continue to sit on the sidelines, still drafting outdated plans.
We closed $1.8 billion of TCV across our business, which represents a 56% increase year over year. We closed a record-setting number of deals in Q4, including 32 deals worth $10 million or more. Our U.S. business is at the forefront of the AI revolution, growing 52% year over year in Q4. Last quarter, U.S. commercial revenue grew 64% year over year and 20% sequentially. AIP continues to fuel new customer acquisition, as we have nearly 5 times the number of U.S. commercial customers as we did 3 years ago, and significant expansion opportunities at existing customers. Organizations who have crossed the chasm with Palantir are driving real impact quickly. In this AI revolution, the biggest risk is not moving fast enough, and organizations are looking to us. With Palantir, as soon as work begins, we're delivering real, quantified exceptionalism for our customers. In my conversations, they're excitedly asking how we can replicate this success across their organizations. One of America's largest pharmacies has been a customer since early 2024 and signed a $67 million TCV engagement with us right after the pilot for workflows including automatically load balancing prescription fulfillment and orchestrating patient outreach. An American telecom company became a customer approximately 2 years ago and recently signed a $40 million TCV expansion deal to help manage and accelerate their decommissioning of old network technologies and equipment in order to achieve significant cost savings.
The pace at which Palantir is closing record deals shows that businesses are embracing AI solutions that deliver immediate results. From U.S. commercial revenue growth to new customers expanding rapidly, it's clear that Palantir's strategic approach to integration and scalability is what gives it the competitive edge.
Last earnings call, we mentioned the leading global insurance organization that deployed AIP to help automate underwriting workflows, reducing a 2-week process to 3 hours. That organization signed a nearly $11 million ACV expansion deal in Q4. Panasonic Energy North America is seeing the effects of its AIP expansion as they've created a maintenance assistant to help 350 technicians in making 5.5 million batteries per day, resulting in reduced machine downtime, greater throughput, and rapid onboarding of new technicians. In Q4, we also announced the customers in the inaugural Warp Speed cohort, which are using Palantir's Warp Speed to gain an advantage in aspects of their manufacturing operating system, including automated visual quality inspections and dynamic production scheduling. Anduril CIO Tom Bosco noted, quote, "By using the software, we've seen up to 200x efficiency gain in our ability to anticipate and respond to supply shortages." Our U.S. government business, the foundation on which Palantir was built, is exceedingly strong, with revenue growing 45% year over year last quarter. We take pride in supporting the critical missions we're delivering against. Notable deals included the U.S. Army extending its longstanding partnership with Palantir to deliver the Army Vantage capability in support of the Army Data Platform for up to 4 years.
Palantir is proving that AI isn't just about automation, it's about strategic dominance. The ability to anticipate supply shortages 200 times faster gives companies and governments a competitive edge that was previously unimaginable. This is what it looks like when AI moves from theory to mission-critical execution.
We also announced our recent contract expansion with U.S. Special Operations Command, marking the first deployment of Mission Manager to U.S. Special Operations Forces units. Our international commercial business continues to see pockets of growth alongside the large renewals of some of our long-standing customers. For example, Rio Tinto extended their partnership with Palantir for an additional 4 years, noting AIP is making their unstructured data accessible, allowing them to quickly attack problems previously deemed too complex. Using our software, network rail specialists coordinate 53 driverless trains, each with 240 wagons, ultimately improving throughput and safety. Our international government business also achieved strong growth. Revenue increased 26% sequentially last quarter, driven in large part by the UK, including our work with the NHS to roll out the Federated Data Platform as 87 acute NHS trusts and 28 integrated care boards have signed up to use it as of November 2024. We accelerated through the end of the year, and we remain full throttle. We're at the dawn of this AI revolution, and in this winner-take-all AI economy, Palantir leads the way. I'll now turn it over to Shyam.
In a winner-take-all AI economy, speed is everything. Palantir isn't just accelerating adoption, it's shaping the battlefield of global industry and defense. The organizations leveraging this technology today aren't just improving, they're securing their dominance for the AI age.
Thanks, Ryan. For the last 2 years, we've been saying that even while the LLMs are improving, the models across both open and closed source are becoming more similar, and performance will converge, all while the cost per token for inference continues to drop substantially. And that's because the market's been focused on AI supply, the models. With the release of DeepSeek R1, that has gone from a contrarian position to consensus. It's now blindingly obvious to everyone. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand. From the beginning, AIP was built for this reality. Chat was always a dead end. Instead, we viewed LLMs as a new runtime for the AI labor. To capture the productive value of this AI labor, you need an intermediate representation of your enterprise that AI can actually interact with. How do you allocate inventory, onboard customers, process claims, call for prior authorization, and the like? That intermediary representation that makes all of that possible is ontology, and that's why it's been the secret to our meteoric rise. We are convinced the normative value for AI is enterprise autonomy, the self-driving company. Users go from performing the workflow to supervising an army of agents, teaching them how to handle edge cases and reducing dwell time. This is where we are maniacally focused with our customers. We've been working with a large multinational bank to automate core back-office processes. What used to take 5 days now takes 3 minutes. Much more than the labor savings, this improvement eliminates historical constraints on the middle office and now enables the bank to create entirely new and differentiated financial products.
The market focused on AI supply, but Palantir was always solving for demand. The shift from performing workflows to supervising AI agents is more than just labor reduction. It's an entirely new paradigm of enterprise intelligence. Those who adopt it will operate at a level their competitors can't even comprehend.
We're working with a top engineering and construction firm to automate the identification of risks across tens of thousands of pages of technical documents, replacing months of arduous manual reviews with AI labor that can flag major risks to engineers in minutes. And we're working with a large power systems company to automate the understanding of technical diagrams to turn them into quotes into orders. And finally, we're working with an automotive supplier to analyze CAD files for component designs to have AI labor validate engineering standards and manufacturability checks. That is a 100-hour process for human engineers, now automated and serving up exceptions for human review. The before and after with AI is stark, and the speed of implementation is accelerating. You can divide companies up into two categories, the quick and the dead. Turning to Warp Speed, Palantir's modern American manufacturing operating system, it continues to move at Warp 10. Our nation is in the beginning of a great reindustrialization as we compete with China to secure a free world and individual liberties. This is a competition we cannot afford to lose. We announced our first cohort of Warp Speed customers, including Anduril and L3 Harris. The response has been exceptional, and the pipeline is swelling. Warp Speed integrates engineering, test, production, quality, and operations so that manufacturers can build better and build faster. Our FedStart offering hit a major milestone with the approval of our FedRAMP High environment for FedStart customers. This is radical acceleration, both in reduction of time and costs of market access for software companies in the federal space. Finally, in U.S. government, our deep investments in CJADC2 continue to deliver results. Maven continues to see significant adoption and is pathfinding new AI capabilities throughout the kill chain. Substantial new investments integrating contested logistics into Maven's AI-enabled kill chain met their moment in exercises in Q4. Adoption continues within the military departments, specifically Army, Air Force, and Space Force, as well as at the combatant commands with expansions at SpaceCom, Southcom, AFRICOM, and StratCom.
The approval of FedRAMP High for FedStart customers is a game changer in federal tech. By reducing time and costs for market entry, Palantir is reshaping how software companies engage with the U.S. government. This isn't just acceleration, it's leveling the playing field for innovation in national security.
While Hurricane Helene response galvanized the adoption of Maven on Unclass beyond just the secret and top secret networks, the adoption has continued to grow as Maven is used for securing our nation's border and securing our nation's airspace by enabling drone domain awareness. And Maven is reaching our allies and partners via U.S.-supplied capabilities called Maven REL, all spurred by real-world events and the need to collaborate in real time in crisis. We are really just getting started with Maven and have an ambitious roadmap and a set of customer opportunities in front of us to deliver the unfair advantage our warfighters deserve. I'll turn it over to Dave to talk us through the numbers.
Thanks, Shyam. We had an outstanding fourth quarter. Revenue growth accelerated to 36% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 1,600 basis point increase compared to the growth rate in Q4 of last year. America continues to rapidly embrace the AI revolution, and we saw this unrelenting demand drive impressive outperformance in our U.S. business, which grew 52% year over year and 12% sequentially. Our U.S. commercial business grew 64% year over year and 20% sequentially, and our U.S. government business grew 45% year over year and 7% sequentially. On the back of this continued strength, we are guiding to a full year 2025 revenue midpoint of $3.749 billion, representing a 31% year over year growth rate. We delivered these outstanding top-line results while expanding adjusted operating margin to 45%, the strongest adjusted operating margin in the company's history. Our revenue and profitability drove a 13-point sequential increase to a Rule of 40 score from 68 in the third quarter to 81 in the fourth quarter. We also had an exceptional cash flow quarter with adjusted free cash flow of $517 million, representing a margin of 63%, and $1.25 billion in adjusted free cash flow for the full year, representing a margin of 44%. Turning to our global top-line results. Fourth quarter revenue grew 36% year over year and 14% sequentially to $828 million. Full year revenue grew 29% year over year to $2.87 billion. Full year U.S. revenue grew 38% year over year to $1.9 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 39% year over year and 14% sequentially, and full year revenue grew 32% year over year.
Palantir's record-breaking profitability and revenue growth aren't just impressive, they signal a fundamental shift in how AI is monetized at scale. As the U.S. embraces this AI revolution, the companies integrating these tools today are positioning themselves as the economic powerhouses of tomorrow.
Customer count grew 43% year over year and 13% sequentially to 711 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 18% year over year to $65 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 31% year over year and 17% sequentially to $372 million. Full year commercial revenue grew 29% year over year to $1.3 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 37% year over year and 18% sequentially, and full year commercial revenue grew 36% year over year. We had our strongest quarter of commercial TCV booked at $995 million, representing 42% growth year over year and 63% growth sequentially. Our U.S. commercial business is seeing unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Fourth quarter U.S. commercial revenue grew 64% year over year and 20% sequentially to $214 million. Full year U.S. commercial revenue grew 54% year over year to $702 million. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 76% year over year and 19% sequentially, and full year U.S. commercial revenue grew 69% year over year. We also had our strongest quarter of U.S. commercial TCV booked at $803 million, representing growth of 134% year over year and 170% sequentially. This exceeded our next highest quarter of U.S. commercial TCV booked by nearly $400 million, highlighting the increased demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 99% year over year and 47% sequentially. Our U.S. commercial customer count grew to 382 customers, reflecting growth of 73% year over year and 19% sequentially. Fourth quarter international commercial revenue grew 3% year over year and 15% sequentially to $158 million.
U.S. commercial adoption of AIP is skyrocketing, with demand translating into record-breaking bookings. This isn't just about companies experimenting with AI, it's a full-scale migration toward AI-driven operations, and Palantir is leading the charge.
Partially driven by revenue catch-up from a customer in Asia. Full-year international commercial revenue grew 9% year over year to $594 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating our growth in the U.S. commercial business. Revenue from strategic commercial contracts was $9.6 million for the quarter. We anticipate first quarter 2025 revenue from these contracts to decline to between $4 to $6 million compared to $24 million in the first quarter of 2024. We anticipate 2025 revenue from these contracts to be approximately 0.5% of full year revenue. Shifting to our government segment. Fourth quarter government revenue grew 40% year over year and 11% sequentially to $455 million. Full year government revenue grew 28% year over year to $1.57 billion. Fourth quarter U.S. government revenue grew 45% year over year and 7% sequentially to $343 million. Full year U.S. government revenue grew 30% year over year to $1.2 billion. This acceleration was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 28% year over year and 26% sequentially to $112 million, bolstered by our continued work in UK healthcare and defense. Full year international government revenue grew 23% year over year to $372 million. Fourth quarter TCV booked was $1.79 billion, up 56% year over year and 63% sequentially. Net dollar retention was 120%, an increase of 200 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution.
Palantir's AI-powered government software is accelerating adoption at every level, from U.S. defense to UK healthcare. With net dollar retention rising and TCV bookings hitting record highs, it's clear that AI is no longer an experiment. It's the backbone of modern governance.
As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $5.43 billion in total remaining deal value, an increase of 40% year over year and 20% sequentially, and $1.73 billion in remaining performance obligations, an increase of 39% year-over-year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter and the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $373 million, representing adjusted operating margin of 45%. Full-year adjusted income from operations was $1.13 billion, representing margin of 39%. Q4 adjusted expense was $455 million, up 1% sequentially and 14% year-over-year, and full-year adjusted expense was $1.74 billion, up 9% year-over-year, primarily driven by our continued investment in AIP and technical talent.
Investing heavily in AIP and technical talent while maintaining strong margins shows that Palantir isn't playing defense. It's doubling down on AI supremacy. This isn't just growth. It's a calculated move to lead the next industrial and technological revolution.
We expect to see a more significant increase in expense in 2025 as we invest in technical hires, the product pipeline, and continue our focus on AI production use cases, all while delivering our goals of sustained GAAP profitability. On the back of the strength of our results, we want to congratulate our employees for the successful delivery of their market vesting stock appreciation rights, or SARs. As a result of this achievement, we accelerated $131 million of one-time expense in the fourth quarter related to these equity awards. Fourth quarter stock-based compensation expense was $282 million, and employer-related equity tax expense was $80 million. Full-year stock-based compensation expense was $692 million, and employer-related equity tax expense was $126 million. Fourth quarter GAAP operating income was $11 million, representing a margin of 1%. Fourth quarter operating income, when excluding one-time SAR-related expenses, was $142 million, representing a 17% margin. Full-year GAAP operating income was $310 million, representing an 11% margin. Full-year operating income, when excluding one-time SAR-related expenses, was $442 million, representing a 15% margin. Fourth quarter GAAP net income was $79 million, representing a 10% margin. Fourth quarter net income, when excluding one-time SAR-related expenses, was $165 million, representing a 20% margin. Full-year GAAP net income was $462 million, representing a 16% margin. Fourth quarter GAAP earnings per share was 3 cents, and earnings per share when excluding one-time SAR-related expenses was 7 cents. Full-year GAAP earnings per share was 19 cents. Fourth quarter adjusted earnings per share was 14 cents. Full-year adjusted earnings per share was 41 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 81% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter.
Palantir's focus on AI production use cases is paying off, with adjusted earnings per share hitting 41 cents for the year. Unlike AI firms burning cash on speculative R&D, Palantir is proving that AI can drive real bottom-line impact.
Turning to our cash flow. In the fourth quarter, we generated $460 million in cash from operations and $517 million in adjusted free cash flow, representing margins of 56% and 63%, respectively. For the full year, we generated $1.15 billion in cash from operations and $1.25 billion in adjusted free cash flow, representing margins of 40% and 44%, respectively. Through the end of the fourth quarter, we repurchased approximately 2.1 million shares as part of our share repurchase program. As of the end of the quarter, we have $936 million remaining of the original authorization. We ended the quarter with $5.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now, turning to our outlook. For Q1 2025, we expect revenue of between $858 and $862 million, and adjusted income from operations of between $354 and $358 million. For full year 2025, we expect revenue of between $3.741 and $3.757 billion, U.S. commercial revenue in excess of $1.079 billion, representing a growth rate of at least 54%, adjusted income from operations of between $1.551 and $1.567 billion, adjusted free cash flow of between $1.5 and $1.7 billion, and GAAP operating income and net income in each quarter of this year.
These numbers are absolutely staggering. Not only is Palantir growing, but they're accelerating with a focus on maintaining a massive free cash flow. While other AI startups might be burning through their capital to fuel growth, Palantir is proving that profitability doesn't have to take a backseat to innovation. In fact, their balance sheet and strategic investments only strengthen their position as an AI leader. The fact that they're continuing to expand into crucial markets while keeping financials strong speaks to their operational excellence and long-term vision. Palantir isn't just innovating in the AI field, they're reshaping entire industries while maintaining financial discipline. And that's a combination few other companies are managing today.